Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, looking at the last print of 1,080.75, we'll call it 50, and looking at kind of an interesting session today. This, of course, is Thursday, the 12th day of August 2010, and what a beautiful formation we've had today. We had a gap down lower. First off, we had the Fed reaction on Tuesday, and followed by a subsequent not impressively lower move on Wednesday, and then on Thursday, of course, we've got the continuation gap to the downside and a beautiful filling of the gap to just simply retest the underside of the trend. We're looking at this is essentially our intraday dynamics, our proprietary indicators that we use to gauge where the market's likely to head. And this, of course, this morning, this AM, even though we had the gap down, we did expect a fill based on the bullishness here. We had a positive divergence here, full bullishness there, positive divergence here, here, and here, suggesting that the bulls would at least recover the down move to the on the early session. So, having said that, where are we now? Well, we've just simply retested the underside of the trend, a beautiful head and shoulders formation forming right here, unfortunately, because we are predominantly long, I believe, on most of our day traders, at least, and so we'd like to see this market continue on this bullishness, or at least positive divergence that we've got in the market. We just need to move above 1,085, just certainly to hold this 1080 level right here would be ideal, but certainly the bears do remain in control, as we essentially have, from a price technical perspective, filled the gap and retested and confirmed now the trend as resistance, and certainly the filled gap as resistance. So we'll see essentially where she goes. Looking at the day ahead indicator, actually you saw on this this was buy the next day. Any weakness, buy here, a little bit of an impressive move, buy again at the lows. Wow, very impressive move. This, of course, was the Fed day. This was bearish, so this essentially meant sell any strength, or certainly sell any strength the day following. And certainly to the Bears' credit, they managed to keep control of the market in its entirety on yesterday's session, during yesterday's session. And again, we got even more bearishness on yesterday's session, of course, Wednesday, the 11th of August, and got the gap down lower. But the bulls, as you can see, we're getting some positive divergences here, suggesting the bulls may be able to rally. But again, right now, the 620 level and the TF, the Russell, proven to be impressive resistance. We definitely want to get above that to continue on this bullish recovery phase. Having said that, we are, from an official market timing basis perspective, still neutral. We closed out our bearish exposure at 1098 on the S&Ps right around before we got this move higher. We weren't particularly convinced that the market was going to move higher. So we didn't go to bullish, and now you can see why. We've seen an impressive move to the downside. Here's the Swing System 5.0, the venerable Swing System 5.0, putting up amazing gains, as you see, as is the case. Beautiful long setup right there. Short, long, gave back a little more than we would like, but quick back to short and then quick back to long for yet another gain in this market. And if we pull up the chart, you can actually see we had a bit of a correction right there. Pretty impressive correction. It was just all green for the whole of essentially the last year and a half or so. Then we got this big correction, and boy, was it a great opportunity to get involved. We always recommend, in fact, we've mentioned to you guys and even to our clients, this pullback that we've seen largely, or that we saw largely in our portfolios, was definitely a great opportunity to take advantage of. And of course, we've seen essentially 100 to 200% rallies in our portfolios off of those lows. But as you can see, that's a Swing System 5.0 making beautiful gains, as it were. Here's our Evo. Essentially, you see a beautiful long right there, beautiful long right there, another long this morning, which is why we're looking for this market to go higher. But if we look at the Evo even, it was another opportunity to, with this correction, to get involved right around here on a little pullback. You always want to buy the pullbacks. You can add exposure anytime you want, as long as we see these moves breaking out to new equity highs. But if you see a pullback in any of our portfolios, you definitely want to take advantage of that, as you would with buying any other instrument or vehicle of investment. But so that's Evo right now. We're actually trying to get over to Here's another good example of a pullback. This is the free system that we launched for you guys, essentially a contrarian sentiment system. We'll go ahead and pull that up, and there you see an impressive pullback, and we'll go ahead and do it right there. Beautiful pullback. Again, it was all green for the last year or so. Year and a half, all green. Then we got that nice little pullback in the portfolios. Great opportunity to get involved. And if you actually look at the detail, include the latest trade, we're right back getting ready to break out to new highs at $11,000 in profit per contract on there. And that detail actually takes into consideration this beautiful short right here at 1120 in the ES market, now at 1080. Quick 40-point pop as we had to endure these little bitty, these little errant scenarios. Here we go, right here. But here's the MRSEM, again in a beautiful trade, another beautiful short. We'll go ahead and just pop that up, see where that is. Look at that, very impressive. We'll just look at the line right there. Very impressive at new equity highs, almost $70,000 in profit, and also in another beautiful trade setup as it went short, 768 in the EM, and now of course it's 738. So a nice $3,000 per contract is the gain for the MRCM. But we're trying to get over to the this chart of the daily market, the S&P 500 cash market. Looking at the last print of 1,083.60. We closed our bearish exposure right here at 1098. Nice little gain of 60 points in about 3 months or so. Assuming you didn't add additional exposure when we mentioned right here for a nice move down there, assuming you didn't take any profits here on this extension move, inverted head and shoulders formation, but it all just simply wasn't enough to suggest bullishness given this swing point high right here. The convergence of that along with the confluence of that along with the fib retracement zone, certainly the band right here around 1120 that we had mentioned, really just kept us from going bullish. Any other time, as mentioned, we would have jumped in the bullish case, but there were too many bearish indications suggesting the market was not going to continue higher, and of course it hasn't continued higher, and we've actually seen a move back to the bearish side. Are we going back to bearish? No, not quite yet. We're going to wait and see how this unfolds. We could chop around here a little bit. We certainly do expect some swoons the next couple of months, which will present a great opportunity to go back to bullish, but right now the picture is bearish in general. Price technical trend, directional movement, momentum, and so on and so forth. The moves are bearish. Are we officially bearish? No, we're going to hold right now officially neutral as the market tries to work through these conflicting formations. So I guess that's about all right there. So how have our portfolios been doing? Well, yesterday was an impressive day for both the Triple Threat Trader HR and the MSA UDT. They were the standouts, the stars of the session yesterday, actually both gaining over 20% in a single day. Not in a month, not in a week, not in a year, but 20%, over 20% in a single day. There you have it. Actually, it was a banner day, really, in large part because the Matt Black, the venerable Matt Black, $100,000 portfolio, very well diversified, exposed to probably all of our systems, up $18,000 yesterday was the case, and this is right back at the recent highs that we've seen in the portfolios. But there you see the Triple Threat Trader HR gaining 20%, MSA UDT gaining 23%. And there are the portfolios. And today, the MSA UDT is actually another stand-up, up another 11% in the portfolio. As we mentioned, we were long. There's the Evo going long that we just mentioned to you. And up another 11% or so. But here we go. Over the last 26 trading days, as of yesterday, last evening, the Matt Black, the very diversified Matt Black, 110% return. That's actually back up to the highs, getting ready to hopefully break out to new highs. And there's, of course, the Triple Threat Trader HR up 140%, running out of time. If you guys have any questions, go to the website, chat with Support Team Live. Or if you're interested in subscribing to these, just simply subscribe. Have an account funded with one of our auto brokers, and they take care of everything. You don't have to do a thing. If you're interested in subscribing, you can actually go, let's say the MapDT version 4.0 HR is what you've heard. A lot of your friends are involved in that, making good money. Just add to cart, and then you can enter promo code VIDEO, and you'll actually save an extra 20% off the portfolio. There you see it's already been entered. There's on 2 contracts. You save $1,000 on that. If you have any questions, write to us at admin@MiniAnalyst.com, and we'll see you next week.